Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, January 25th, 2023. Before I jump into the charts, as usual, please click like if you would and subscribe. Helps us out a great deal. Subscribing helps you too. You get to see when these videos are uploaded for your viewing. And please share the content if you would with friends and colleagues. Helps us out a great deal. So once again, want to take a look at the big picture and work our way into the day. Back in December, early December, we had a meaningful sell signal when we closed below these channel structures, presently dropping weekly at 157.39 to 165.50. This is actually now considered a 3 to 5 week objective, but let me back up a little bit. That following the settlement below December 12th, our target was met, and that was a 3 to 5 week objective that was met in about 2.5 weeks. That is presently 92.35 to 104.05. Another set of channel support. So having come off of this channel support, we were then expecting a rebound rally into the 157.39 to 165.50 region. That was a few weeks ago, a 3 to 5 week buy signal, essentially following a test of this area, expecting the 157.39 to 165.50 area that actually may be realized this week. We'll just have to see how the earnings go because they're obviously going to impact this market. And volatility can spike. It's already pretty high right now, but we could quite easily, within the week, reach into that 157.39 to 165.50 region, where we can top out through February, possibly the balance of the second quarter, and from here fall back to channel support, which is dropping at a pretty decent pace, presently between 92.35 and 104.05. As I've been mentioning, once we push into the the upper 150s to mid 160s, this is an area that if you're long and your time horizon, it doesn't really matter, in my opinion, what your time horizon would be. Most of you are either day traders or you're swing traders or you're position traders trading out maybe several months. Any of those should consider liquidating a long position and playing the short side. The short side for the 1 to 2 week trader would be back into the low 130s. And for, the 2 to 3 month trader would be back into I'm going to call it just the 80s. This is dropping at a pretty good pace. So that could mean buying, 80 strike out of the money puts that don't expire for at least several months. And so I think that pretty much covers the big picture. I will finish by saying that if we were to close the week Friday above 165.50, and the potential is there with positive earnings, and the volatility that we have now. And if that does occur, I would anticipate this new channel top that is based in part on the recent low from a month ago. And that's at 260.93 this week. But I'd mentioned how if we close above 165.50 at the end of any week, we have a 2 to 3 month buy signal into the 230s, 240s. And this formation is dropping gradually. This will be an important test for the market as we move into later year if it were to be tested. But until then, once again, 157.39, 165.50 on the weekly chart, prime short selling territory, prime long liquidation territory in anticipation for you 2 to 3 month traders who may then see this market fall all the way back to this channel support within 2 to 3 months. As I think I said yesterday, we could trade inside this widening wedge for months to come. So that covers the big picture. Let's move on to the nearer term. We did a couple of days ago close above this descending channel top at 130.23, which then indicated 157.86 to 166.26 within just a week or two. So this is a price accelerator. Up to that point, the low 130s were considered able to contain buying on a weekly basis, and we could at that point fall back into the 110s. Not to be. We closed above 130.23, this channel top, and now we are set, in my opinion, to reach into the 157.86 to 160.26 or 166.26 area. And along the way, we also closed above this trend line at 135.10, which actually contained the highs last week pretty well. We had a day sell-off, and then we were right back at it. So I have 135.10 as an intraday support level that, if tested, can contain intraday weakness. And if we break 135.10, the 130.23 former channel top is in reach. It is actually preceded by 130.94. Wrong chart. 130.94. So as you can see here, I don't know if we're going to see this area today before the earnings are released in the afternoon. When I say today, I'm talking Wednesday. Obviously, you're probably watching this on Tuesday afternoon. So I know there's this sort of what day are we in mode, and I don't mean to confuse anybody. I do need to sort of probably change the way I express this, but I am recording this on Tuesday afternoon after the close. This is for Wednesdays. It's predictive. So 135.10, if we break it, that level I showed a moment ago, the 130 handle in reach, 130.23, that long-term channel top I mentioned a moment ago, 130.94 is a rising 3-week channel bottom. We can bottom out here for the week, even through next week, and from here turn back up into the upper 150s to mid 160s within a week or two of doing so. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Now, if we do close today below 130.23, that long-term channel top I showed here, if we close below this level, then I have 118.10 as our target, and that is this new rising 2/3 speed line. This is realizable within 3 to 5 days, could be 1 to 2 days of closing below 130.23. 118.10 can also contain weekly selling pressures, and what I'm pointing out here is if we close below 118.10, then we revisit this 92.35 long-term support. But until then, the way I'm framing this is good bottom picking in the low 130s through next week, expecting the upper 150s to mid 160s. If we close below 130.23, we should shake out long positions, the short-term longs down to 118.10, where we could also bottom out through next week. And not unless we close below 118.10 do I see this market pivoting aggressively south into later February, that 92.35 area that I show here, then expected within a matter of 2 to 3 weeks of closing below the 118.10 speed line. So if you're looking at the 2 to 3 week time horizon, we are constructive. We are bullish above 130.23, and we turn bearish below 118.10. Inside of this 118.10 to 130.23 region is solid day trade territory, solid 1 to 2 day swing trade territory. But in terms of my personal confidence that will fall all the way back into the low 90s again, that would come with a settlement below 118.10. Holding above 130.23 to 130.94 maintains a 157.86 to 166.26 target. And in fact, let's take a look at the day itself. This 153.86 channel top is a session containment level. So upside today, I've got 146.50, nothing more than yesterday's high, Tuesday's high. And if we push or open above 146.50, 153.86 is in reach, where we can place a good high prior to the earnings report. I'll let you know that this 153.86 rises to 156.62 on Thursday, and by late in the week, it actually converges entirely with this 157.86. So 153.86, well suited for aggressive day traders. You could liquidate a long position here from the last couple of days. You could set a short, perhaps, ahead of earnings. We could fall off from here, back into the 130s again, perhaps. I don't know about on an intraday basis, but the following day, certainly with a poor earnings report. And, you know, if we close above 153.86 tomorrow, actually, yeah, we should then test 157.86 to 166.26, which on the weekly chart is 157.39 to 165.50. This is a big area. Can contain buying through February, possibly the balance of the second quarter. And as I say, from there, we can fall back into the lower 90s or lower. This is dropping into the 80s over the next week and the 70s over the next month. So keep that in mind. But once again, if we close above 165.50 at the end of this week, and I think that's a long shot, but it is certainly possible with the positive earnings that we could close above 165.50. And if we do, once again, no good reason to be short Tesla, as we we move through the rest of the first quarter, the next 2 to 3 months, then expecting 260.93. So we've got a good long-term low if we close above 165.50 on Friday. Until then, this is short setting, long liquidation territory in anticipation of a possible bearish route back into the 90s or 80s over the following month or two of activity. I'm going to round it out at that. I'm going to leave it at that for Wednesday's Daily Tesla Report. I'll be back again tomorrow with Thursdays after the earnings. And I think that's all that needs to be said. Please click like and subscribe, and I'll talk to you soon.